To the European movers.
Okay, well, it's all hotting up in the world of banking. European banking stocks up sharply today. I'll just pick out a few examples here. Crédit Agricole in France up 3.87%, ING Group in the Netherlands up 3.15%, and Deutsche Bank up in Germany up 2.61%. And I put this down to the Barclays effect. And the hopes of, as you say, of a Greek deal and perhaps a turning point in the sector fortune. So what's interesting is that as I was leaving the office, there was a headline doing the rounds that, according to Sky News, that Barclays has been sniffing around European banking assets in places like Portugal and Italy, perhaps looking to perhaps buy some distressed assets on the cheap. So that was,
no, they're good at that, aren't they?
Well, they are, yeah. They did very well out of the ramp of Lehman Brothers, didn't they, in the States? So this European banking sector, very firm on the back of those kind of stories, and it's also seen by many money managers as potentially one of the biggest beneficiaries of a European recovery if we got one. So that's a sector to keep an eye on. And then going the other way, UK retailers are down for choice today. Picked out Next here, NXT in London, minus 1.94%, and Sainsbury's, one of our bigger grocers, SBRY, LN, the ticker there, down 1.18%. Why are they easier? Well, quite simply because of what Mr. Osborne said in his budget yesterday by upping the minimum wage, or the new living wage as we're to call it. That raise in minimum wage levels is seen as being something that's likely to compress the margins at retail groups who typically employ lots of people on those type of contracts and those type of terms, and that's very much seen as squeezing margins over the medium term. Of course, if we carry on growing at the rates that Mr. Osborne's predicted, maybe that won't be so much of an issue, because turnover might save the day. But for the moment, the market's taken a slightly dim view of that for the retailers.